Hi, everyone. So now we have a panel on the VC ecosystem in India. This panel consists of founders, limited partners, and our very own vice chairperson, Mr. Karthik Reddy from IVCA and Bloom Ventures. Typically, we would want to have perspectives from these folks on, is the growth which is being seen in India fundamental in nature? How have we reached to a point wherein we have such large number of unicorns and we are still counting, and what are the major milestones that we've covered in this journey, and is in this accelerated growth, how do VCs actually look at right sizing their funds and managing risk? So for this session, I would like to call upon stage Mr. Karthik Reddy, who's the Vice Chairperson IVCA and co-founder and managing partner Bloom Ventures, to moderate it. And on the panel, we'll be having Sunil Mishra, partner primary investments, Adam Street Partners. With him, we'll have Mr. Stefan Strain. He's the CIO at Cleveland Clinic Investment Office. And we'll soon be joined by Mr. Rahul Garg. He's the founder of Moglix. So with that, I would like to have Mr. Karthik Reddy start the session. Over to you, sir.
Thanks, Rohan. Thanks for the opportunity and the invitation. Thanks, Stefan and Sunil, for joining. You've already been introduced by firm and designation. It's my pleasure to welcome both of you from two different parts of the world, from Singapore and the East Coast of the US, to what we think will become an interesting format for the future. It brings both all the key constituents of the Indian private equity and venture capital ecosystem into India. It's the inaugural edition of what we are trying to do as the IVCA. Very fortunate to have world-class speakers who are deep believers in India already. And this is one of the virtues of the post-pandemic format, where both of you can be at home at different time zones and still engage with most of India. So we are going to get Rahul on board at some point, the CEO and co-founder of Moglix, one of the many unicorns minted this year. But this is something we're attempting for this year, where we are trying to get high-quality LPs who are essentially the adjudicators of this capital into the Indian market, and the eventual beneficiaries who are making us all look good from the entrepreneurial side. And I'm very glad that we are able to enable that as the GPs sitting in India. So to kick off, both Stefan and Sunil, I think it would be great for the audience to hear a little bit more about the firms. What is your exposure and experience in India been, as at the outset? And very interesting question that one of you discussed with me, which is, I think a lot of people say, I'm a good GP, how come, you haven't allocated to me? But I think what people don't understand is that they're competing for a global pool of capital, and they're not immune to what's happening around the world. So how do each one of you look at India in the context of the global pools of capital that you have to allocate to, and how high is the bar for an Indian GP, the Indian ecosystem, to excite you to add to that risk in India? So maybe Stefan, you could go first, and then I'd love to hear a similar version from Sunil. Thank you.
Thank you, Karthik. Do you want introductions first, or do you want to go right into that question?
No, introductions, of course, and then maybe a follow on into that. Your answer to that question would be great.
Sure. So good evening, everyone. Thank you for having me here today. It's a pleasure to be with you. I wish I could be there in person, but I know you all wish you could be gathering in person too. So, I represent the Cleveland Clinic. I'm the chief investment officer here. I run a team of about 25 individuals that manage the clinic's investment portfolios. A long time ago, I started out as a VC myself. I was a seed and early stage investor in technology and healthcare. So it was frankly the toughest decade of my career. So I wouldn't trade those years for anything, because it taught me an awful lot about what it was like to be on the GP side of these investment partnerships, and to really appreciate the tough job that you all have. I've been an allocator since 2005. And my first investment in India was actually in 2006. It was a little bit easier back then, because most of the firms Indian firms had a US presence. And so as an allocator, the lazy allocator, you didn't actually have to go to India to invest in India, even with a local firm, because they all had either a New York or Silicon Valley presence. And that was a huge mistake, honestly, on my part, by allocating to India without actually going there as a professional first. So subsequently, I spent a lot of time in India, primarily in Mumbai, Delhi, and Bangalore. And I'll never forget the second visit I made to the country. It was the tail end of a very long trip, multi-city trip, and I showed up at one of the premier VC offices in Bangalore. It was my last meeting of probably 30 meetings that week. And I'm a rural farm boy. So I was a VC and started out life from a very rural farming community. And a cow greeted me at the door of this Indian VC, which had amazing, early stage technology companies being incubated inside. And I thought, this is probably the best market in the world for me to invest in. So coincidentally, when I arrived at the Cleveland Clinic, my very first investment for the portfolio, as we were insourcing it from an outsourcer, was also in Indian VC, with a manager that I've been a very long-standing supporter of. And their fundraising was coincident with my arrival here at the Cleveland Clinic, and I wanted to make sure that the clinic had the benefit of investing with that firm. But we've been very deliberate about selecting our partners in India, because as Karthik mentioned, we essentially have a global portfolio that we manage, and the investments in Indian VC and growth equity and private equity really have to fit in with that global portfolio. Today, the sum of the portfolios is about $15 billion, so it's a fairly substantial portfolio. The main portfolio of which is about $13 billion, and 8% of that $13 billion is targeted to venture capital. So it's actually a rather small single-digit percentage overall. Sorry, my camera will readjust there. And that 8% is divided amongst firms globally. So it's US firms, there are sector firms, there are Chinese firms, there are Indian firms that all sort of have to fit into those relationships. We have a number of different dedicated Indian VC funds. There are 3 which we've committed to multiple funds over this last 6 years. We do have 2 global managers that have an Indian sleeve, and we have 1 fund of funds manager that has essentially an Asian fund of funds manager that has a fairly strong investment practice in India. And then to complete that, we also have a global, I should say, a public equity portfolio that invests in Indian small cap and mid cap companies. So our Indian exposure is actually, from incubator all the way through public company, and we essentially allocate capital on where we think the best long-term value is going to be. It does compete with other Asian capital sources. In essence, we don't view EM as being the sandbox. We view Asia as sort of being the sandbox, and then allocating along what we think are the best opportunities in Asia. So I hope that answered the question.
Thanks, Stefan. I'll come back to you for a sort of double click on a few of those things and your experience in India. But Sunil, love to hear Adam Street's version of the same, of course.
No, thank you very much. Thanks, Stefan. So my name is Sunil. Unlike Stefan, I was born and brought up in India, and I'm a partner with Adam Street. It's a global private equity investment house. The firm has been around for close to 50 years, manages close to $45 billion only in private equity and venture capital and private credit. So, nothing in public equities, mostly focused on private markets. We came from the venture capital heritage. Actually, unlike some of our peers, we actually started in direct investing in venture. That continues to be part of the firm as well today. And we've also added, fund of fund investing over a period of time, starting with venture in the US and venture globally. We've been a strong believer of venture, even when it was not fashionable, after the .com burst, and close to 20% of our global AUM is in venture. We have been looking at India for long periods of time, investing as well. So close to 15 years plus of investing history in India, started in early days. And we have built a sizable portfolio since we invest both on venture and growth capital side of things. We have dedicated managers for both those segments. We have about 5 venture capital managers in India. We have done sometimes multiple funds with them. So sees this exposure. Asia is about a 15%, give or take, for our global AUM at this stage. India would be about 20% of that. So sizable exposure for the Asian exposure, in line with what we think is a good weight. Clearly, there have been certain challenges historically. Size of the market, liquidity issues, FX issues, and we had to kind of navigate all that. But pretty happy with the performance, I would say. Very happy with how much maturity the managers have shown, sometimes coming through tough times. So remain excited about that, and would love to continue to adding to our roster of managers.
Super. Now I'm going to ask you both, like, obviously what we're all looking forward to. I mean, the name was kind of chosen as an expression of at least confidence on the ground here on what's happening in India. And with that, I'd love to bring in our one of many unicorns that we've minted this year, which is Moglix. And Rahul and me have known each other for almost a decade. It was unfortunate that we were too small to matter in the seed round, so we couldn't get in. But Rahul, crazily interesting journey. Congratulations on becoming one of the new unicorns this year. When you got out of Google, I remember we met in Singapore and you were working for Google there. And at that point, probably you could count off unicorns on one hand, max 2 hands. Would you have imagined that you would be one as early as 2021, where it was such a it felt like a mirage? And of course, we'd love to hear what Moglix does for the audience and for Stefan and Sunil if they don't know you already. So a small short introduction, and then maybe an answer to that opening question.
No, fantastic. Thanks, Karthik, and thanks for having me in this forum. So happy to always share the journey. So a little bit about the company. So I started with a vision: we are going to build Alibaba 2.0. I felt what was happening in the consumer commerce world from my vantage, running Google Asia strategy and working pretty much with every single e-commerce, travel, ad tech company across the region in some shape or form. I felt we were becoming fairly sophisticated to get consumer to think of a product, buy on the click of it, and get it delivered. And I can't sort of wait for a time in the world when we will be thinking about that we want to have an ice cream, and there will be Alexa or some other product which will be giving us already ice cream options, and maybe in 5 minutes you actually have the ice cream options being delivered at home, and you're selecting one of those options, or some crazy world that we'll live in. And I felt that I think similar or maybe a less fancier version of it, but we need to start doing this in the B2B world. And that became a passion for me. I think we attack almost 30% of India's economy in manufacturing and infrastructure. We go after and try to transform them on the procurement, supply chain, as well as distribution side. I think to the earlier question on the unicorn, I don't think as an entrepreneur I started with yes, I believe that I wanted to build a large organization, and I wanted to solve a large problem, which I thought was possible using technology and various capabilities that we will build it together. I don't think time horizon was something that we was like, we'll start to do this over the next 10 years. And if we solve the problem truly in the way that we want to solve the problem, we'll become a large company. And I don't think I was thinking in terms of when do we get to unicorn, or there was no rush. I think there was a rush to problem solving. There was rush to keep growing. There was no rush on valuation per se. So I would say a little bit of serendipity there of where we got to in valuation. And but there is this 100x opportunity ahead for us to execute. So we continue to focus on that versus waking up and thinking about that we are a unicorn.
Sure. Perfect. I mean, a fantastic answer. It's kind of the sentiment. I'm hoping Stefan and Sunil love that answer. I think I'll lead in with my impressions and would love to hear each of your three versions of what you've been observing firsthand, Rahul, at your level as an entrepreneur, and what you've been hearing from your GPs and their star founders, Stefan and Sunil. So, Bloom is an early stage fund. We started off doing seed investing in 2010 and cutting literally $100,000, $200,000 checks. Now, kind of the reason why Rahul couldn't take a check from us. He wanted more money. But then we grew up to a 60 million fund and then 100 million. Now we're trying to raise 150. Market's growing. But most importantly, I think what's been the dramatic transformation on the ground, the way we see it, is this crazy energy and confidence that Rahul just exhibited. I think he's absolutely right. Most of the unicorns that you see today in the market didn't say that they want to be that, right? They just said they started in 15, 16, which is kind of the second mini wave of the startups in the decade, where they said, hey, the time has come to build something substantial, and the infrastructural ingredients of those have fallen in place. And we can see those signs somewhere. And for the first time, you started seeing entrepreneurs trained very different lenses than 2005, 6, 7. You saw people coming from Flipkart, from Ola as like L1, L2 entrepreneurs. And basically that has started and snowballed into like a massive movement where people have the confidence to sit at a very large base, like Rahul is sitting right now and saying the opportunity is 100x from here. You would have never heard that courage or confidence maybe 5 years ago. I mean, not that the entrepreneur doesn't dream that, but I think there was a little bit of humility on, hey, let's get there one step at a time. And now you're beginning to see that unfold in public markets and M&A, the Tatas and the Reliances buying companies which they realize that come of age and come to scale. So Rahul, let me go in the reverse order this time, where, what was game changing in this acceleration? I know you're hungry, but something had to change in the market for fundamentals to change. I agree. I mean, let's just park the valuations aside. How is the business scaled? Just give us a sense of the scale of the business, if you can, to the extent that you can disclose. And how did that scale acceleration happen in the last 6 years of the journey, and specifically in the last 2 years of the journey?
Yeah. Got it. So, just to give you a little bit sense of the, just one sec.
Rahul's phones are buzzing.
It's weird. Maybe, I mean, there is an Alexa and a landline phone as well now. But I think just from a scale
Investors are calling, sir. Investors are calling.
So firstly, from a scale perspective, I mean, we have a fairly large footprint of supply chain, and customer base in India. We are several $100 million. Unfortunately, that's private, not the exact number, but we work with more than 500 plus large enterprises. We work with 500,000 SMEs. We work across 35 warehouses, supply chain established in the country. You talk about an auto company, steel company, mining company, pharma, chemical, many of the core sectors, infrastructure. We touch all of these verticals in a fairly meaningful manner. We're present in India and UAE as we speak. In fact, I'm joining from Dubai this evening. And we continue to grow on, if I look at the last 2 years, I think we have grown. Last year, we grew 200% year on year. Before that, I think close to 75 to 80% year on year. So I think we have had various moments of acceleration, some of them serendipity, I would say. So the first 2 years of journey was a lot of product market fit, figuring out the value proposition. How do we deliver the value proposition? How do we establish technology operations around it? I think the first element of acceleration happened for us was GST, because before GST, there was a lot of friction in terms of running supply chain. I think that's a one moment in history of India's B2B supply chain, which happened during our time. I mean, for a consumer payments world, I think it was demonetization, and for us, it was GST, right? So, which kind of enabled us to get there. The second, I would say, element that happened is among the large ones, I would say, is COVID. because COVID just said that you can't work with physical offline distribution, offline retail. I think many of the consumer commerce companies have benefited from that as well, because what seemed like a
Sure.
sort of a disastrous thing, but it has accelerated the journey of offline to online. And the third element that I would point out, I mean, it's not something to do with the B2B, but it helps us in a bit, is the entire consumer commerce increasing, the mobile app data usage increasing, the Reliance Jio launch, which enabled sort of data to be available in the hands of people in mobile. I would say that is again a massive factor, because when we go and talk to the customers, our simple pitch to
Yeah.
them is, if you're using a Flipkart in your consumer world, if you're using Ola in your consumer world, if you're using Zomato in your food delivery, when you are in office, I mean, why would you sort of operate in a manual, clunky way of ordering products or selling your products? So you got to become smart about it. And I think so. We continue to take sort of the tailwind of consumer commerce back to the businesses, and they sort of resonate with that thought process.
No, you couldn't have put it better. I think from where we saw it, we sit, we actually probably didn't anticipate the speed of that tailwind, and doubly accelerated by COVID. I wish I had more B2B commerce exposure. Stefan, are you, relative to, given that you have a global perspective as LPs, relative to what you're seeing in Southeast Asia, China, US, you think India is further like accelerated than, compared to anyone's expectations in the last 2 years? What are your GPs saying? And is there a belief now, at least in your head, that this growth is fundamental? It's not, as Rahul said, it's not valuations, it's fundamental. Fundamentally, things have changed or changing in India. Any views? Would love to hear from your lens.
Yeah, so first, Rahul, we're an investor in some of the partnerships that funded you. So please go for that 100x. We're following.
No pressure.
We're following closely. So I think a couple of things have changed over the last couple of years. As Rahul said, the government reforms, particularly around demonetization and the GST, really were inflection points. I think one of the other inflection points was the rapid expansion and, frankly, global investor base in Geo that sort of happened over the last 2 years. It brought a lot of attention when those software companies and global investment firms put money into Geo. For whatever the reasons were that they took them, I think it really helped the global investor base of folks like us sort of take notice that, oh, this platform actually is going to be an accelerant to what we've all been hearing about, which is essentially the smartphone adoption in India and the number of transactions that can happen over that, leapfrogging all the existing infrastructure that's required in other more mature economies that they have to contend with. And so, I think our GPs are a lot more excited about building global businesses in India. The narrative of the story that's changed was traditionally we're going to build businesses for domestic consumption in India, or we're going to build businesses here in India that are going to essentially deploy technology to the States. And today, it's not about either one of those stories. It's really about building global businesses headquartered in India that can take care of Indian consumption, but also can be expressed around the world. Those business models can be adapted to other developing countries as well as developed. And I think that's actually the most exciting part about investing in India today. The thing that I also, we've really benefited from at the Cleveland Clinic is that I mentioned, when I got here 6 years ago, our venture portfolio was pretty immature. We had very few investments. And that was a good thing and a bad thing. It was a bad thing because I kind of missed a lot of the run-up in China VC, where a lot of my peers have enormous private holdings in their China VC portfolios, a lot of which is trapped and hopefully growing in value. But I don't have that essentially lopsided Asian venture capital portfolio that some of the more mature endowments and foundations have. So I've actually been able to allocate somewhat equally between China and India without having to sort of worry about some of the legacy positions getting liquidity in order to fund more interesting ideas that might be coming out of India and Southeast Asia.
That's super useful. Grateful. Thanks for that perspective. Sunil, love to hear your thoughts. You've been a believer. You've added, managers as you went along. How's that played out, and what has changed? I know people rightfully skeptical till a couple of years ago, and clearly, tide seems to be turning for real. And your views would be great.
So I guess I would say that Rahul and Stefan had covered quite a bit. I think the only thing that I would add is that the talent and the capability and management quality piece of it. I think there was a first generation, there was a second generation, and I would say the wealth creation that comes with some of the early winners is actually jumpstarts a lot of risk taking and also franchise building. So I always said that the Flipkart moment will create hundreds and thousands of entrepreneurs, something like similar that we saw in China. We are seeing something similar in Southeast Asia as well. We saw something like that in Korea as well. So I would say that is the only other piece what I would add. And I would say US, China, India, I would say kind of have a slight advantage because of the quality and the depth of technical talent that is available to be able to capitalize on these massive secular trends that we have from a technology perspective.
No, it's interesting, Sunil, you brought that up because, in 15, 16, people say, are we overcapitalizing these companies? What's SoftBank thinking? What's Tiger thinking? I said, why are you guys complaining? They're funding our growth. They're funding our growth in talent, training, this making mistakes. What if people get fired? I said, that's a part of the training, people. It's going to help in 2018, 2021. That's how an ecosystem grows. So it had to be a net positive impact. People wouldn't believe it back then. And now you're seeing it just sort of play out in spades. So I think the quality of talent is just off the charts. Like I met 6 companies on pipeline calls today, and I couldn't off the bat, maybe tomorrow morning my mind will change, but I could say no to any one of them. They're all highly referred pipeline. And this, by the way, is my weekly referred pipeline into me, not to the firm. And so you're just looking and by the way, then that's probably 1/5 or 1/6 of what the firm gets. I'm not even talking about the unqualified part. So if you look at that quality, it's just mind blowing compared to where we were 10 years ago. And I think I'm making a dramatic statement out here. I actually believe this is the new, sort of age of how entrepreneurship will propagate very large companies in India. I think the old model is at risk, a massive risk. And I would actually argue that the Tatas and the Reliances buying the 1MGs and the big baskets and the Just Dials is sort of just a harbinger of things to come. Basically, you can't beat them, join them, buy them, whatever it may mean. And I think this era of building, what Rahul's done is what historically a tools company would have done, try to build it step by step, offline distribution, 20 years. He's done it in 5. And this is going to replicate itself in, I think, every commerce segment is kind of my take. So a couple of inputs from the two LP stalwarts here. What would you like to see more from India for this decade? What is your, and are we as GPs behind the curve because we're still giving up a lot of ground to the Tigers and the Dragon Years and the SoftBanks of the world? Or should we also step up and right size risk and fund sizes in the current era? Or do you think the party, of course, if it's correct, things do correct, but are you going to warn us to say the party will stop at some time, be careful? Sunil, you could go first, and then I would love to hear Stefan's views on that.
Well, that's the thing about parties, they always stop, and the beauty is that it's a musical chair, so nobody knows when it stops, right? Hope we all had the crystal ball. There will always be excesses, The good thing is there is some fundamental value creation, and every time some acceleration happens, there'll be some froth on the top. So some people will be caught there. But I would say I would think that some of this acceleration is pretty secular. We saw that in I would say China and Southeast Asia. SARS did accelerate a lot of technological trends. By 3-4 years. One could say probably India was kind of unaffected with SARS, but COVID did hit India very hard. And the whole digital stack that the government had done, all the formalization of the economy that was done, I think we probably had the best starting ground for all this technology to come and accelerate everything. So I would say that this should continue for a while. Hopefully, people don't become irrational, and if they do, then they will have to pay some price for that. But I would say we are a strong believer of what we call the founder maturity and manager maturity, and we have invested over 50 years across various markets. Macro comes and goes, and economic cycles comes and goes, but strong founders and strong fund managers have been able to navigate that, and that is why at least I would say the fund model is probably better suited, because we invest over 5 years, we divest over another 5 years, so it gives us an ability to kind of average in, average out, tranche in, tranche out. So we hopefully will be able to capture that, and if you are able to have good vintage diversification in our I would say investments. What we would like to see more of India, I would say a lot of value has been created. Would love to see exits, and hopefully the exits are coming at a consistent pace.
Some money back.
So, it's an illiquid asset class. You got to show it that it's liquid, and there's some really good performance, and hopefully it can sustain. And that would only come if I would say that quality people are becoming founders, and some of those quality people are going to our industry as GPs and as entrepreneurs.
I mean, sort of random. I'm asking for a random score, but like if you rated India 2018 at X on 10 and 2021 at Y on 10, what scores would you put on us from that same founder plus manager maturity lens? Sunil?
Why don't I let Stefan answer, and while I think of my score.
Sure.
Right.
Go ahead, Stefan.
So
Same question, Stefan. Do you think, from your experience in China and other markets, when this inflection happens in technology-led entrepreneurship, do you think it's reversible or stoppable? Because I would like to take, some umbrage in the fact that, this is now a train that's only going like, a plane that's taking off rather. Any contrarian views, any thoughts, any inputs for us sitting in India from your experience in the rest of the world?
Yeah, so I mean, one of the things that strikes me as I think about sort of long arcs and secular trends, I survived the dot-com bubble in the United States. I was actually a VC then. It was a very hard decade. I think India has come through a sort of a similar experience, though it's not exactly the same. And if you think about what the U.S. venture capital industry looked like back in 2002 to 2005, I mean, it was a complete disaster. And there were a lot of funds that ultimately went out of business. The winners have gone on to be very successful, and it's been an amazing, 15 subsequent years. And my guess is that India has also learned its ecosystem, the venture ecosystem, both the entrepreneurial and the GP ecosystem, has learned a lot of lessons from the 2007 to 2010, let's say, build up and energy around Indian private capital. And even today, if you think about like what it takes to be an entrepreneur, like what Rahul essentially has been able to do, it's a very different skill set than what it took to be a successful entrepreneur in 2012. Today, you have to be a global business from the very first day. Before you were building regional businesses or country-focused businesses, it's a totally different skill set. And so I think being able to create that ecosystem where 30-year-olds have an opportunity to build global businesses, but are essentially mentored by successful entrepreneurs and venture capitalists who have been there through those cycles will be very helpful. On what I want to see more from India, I want to see more incubators in India. I don't necessarily want to invest in incubators in India, but I think that the ecosystem there could use more incubators so that those entrepreneurs can get more professional guidance from people on how to build a company from scratch to global in the first 2 years, rather than have to evolve once you've started to prove out your model. I think that I'd also like to see a better climate for foreign investment, because at the end of the day, I'm a USD-based investor, and I think that the more that the venture capital and private equity ecosystem can advocate for their foreign investors to come in and support those companies, the better off it'll be. And then with regard to your last question, Karthik, about What advice would you give to GPs? Should you try to compete with Tiger Global? I would absolutely say no. That's the wrong game to try to play. And I've never heard someone in my chair say, you know what, I wish my VC partner would raise more money and deploy it faster than we ever anticipated. I think you guys have a really valuable a piece of the ecosystem. You need to figure out how you can protect your positions in your companies without becoming a Tiger Global or a SoftBank. That's not a level playing field, and you shouldn't try to fight that battle. What you should do is add value and get large stakes in these companies early on by providing capital plus expertise, and then being able to stay with it. But I would not say triple your fund size so you can write big checks and sort of keep the syndicates at bay. That's not going to be a good strategy.
Thanks. No, great wisdom. Thanks again. And Rahul, I had a couple of questions for you before we reach the end of the panel. One is, your lens as an entrepreneur. How is the belief in the ecosystem towards founders like yourselves? How has that changed in your journey? Suddenly something changed, because I'm sure it wasn't as rosy when you first pitched 5-6 years ago. And ambitions for when you think is the right time as a founder, what's your advice for what's the right time to go to the public markets, if at all, if you're a fan of going IPO? And then what does the journey look like? Why would you choose that journey as a founder compared to private market money?
I think so. Multiple questions there. So, firstly, I think both I started my journey as being associated to startups, probably even during the Google days, and investing across Southeast Asia, India.
That's right.
Some of them with Karthik as well, and I would say that there is a clear maturity cycle, both of founders and ecosystem, that I see. And I would say that there are 2 or 3 different elements that I have seen very, very pronounced. And I take that as positive signals for ecosystem growth. So first, I think there was a time when people would ask this question: what is the global equivalent of this that you're doing in India or in Southeast Asia? I think that question, if it was asked maybe 10 out of 10 times in past, I think people are asking maybe 6 out of 10 times now. Which means that there is a fundamental, I would say, intellectual horsepower increase on both sides. Founders are always supposed to be crazy, but I would say venture ecosystem also sort of catching on that bug a little bit and asking intellectually honest questions of why does it make sense? Why should this product, service, whatever is being built should exist, and therefore it makes sense to do it. And it may make sense to do it in India. It may not make sense to do it in US. I mean, for that matter. So I think that's one maturity index that I use, and I think that has phenomenally grown over the last 5 years, I would say. The second thing that has happened is people, what they were willing to bet, maybe like $250K for those kind of crazy ideas, maybe they are writing $5 million or a $10 million check. And there is a minimum size of capital that is required to kind of make things get off the ground, right? So I would say that many of the great ideas were undercapitalized and therefore probably were not fully getting the speed that they needed. And the third element, I would say, that has happened is, as we are going through this journey, both the domestic Indian market has grown rapidly with all the various inflection points that we talked about, the geo, the mobile, the consumer commerce, number of people playing, all of that, which means that what used to be sort of like, even from my Google vantage point, a dot in the revenue index, which I would not even worry about in the Asia ecosystem, has actually started to become relevant and has started to become large. I mean, you're talking of a consumer commerce industry which is touching $100 billion. So the size really matters. I mean, like at the end of it. So I think our domestic startup transaction volume, transaction gross revenues, they have become very, very sizable. So I would say these are 3 major shifts. And I love the first one, that we are at actually 6 out of 10, hopefully 2 years down the line. And I know enough entrepreneurs from Mexico, from UAE, from Saudi, from UK, from Southeast Asia who've reached out and said that I want to build Moglex for this region. I think that's a fantastic testimony, right? I mean, that
Correct.
I'm sure that
I've heard
happens
that more and more often. That's fantastic.
Yeah. There are various Indian sector leading companies which are kind of get approached in that manner. So I think that's a beauty.
We're almost out of time, Rahul. So maybe a quick question on the IPO, a quick answer on the IPO piece, and then Stefan and Sunil, I definitely want you to give those scores just to get a perception of like how much you think India has shifted in the last 3 years.
So
Rahul,
I think on Moglex journey, we are maybe 2.5 years away from it. But I would think definitely it makes sense to go public. I think for multiple reasons. So, but we are on it, and I'm sure the public markets will love the Indian startup story, given that they are becoming sizable.
Awesome. No, congrats and on the journey so far, and keep rocking, keep building. Sunil, Stefan, last words plus any sense of that, how much the Indian ecosystem has moved in the last 2-3 years by way of some numeric score. Sunil, you can go first.
So I can go first. I think it's gone from say 6.5 to 7.5 and 8. So it's becoming pretty Super. Competitive globally.
Long way to go, but inspiring. That's what we wanted to hear. Yeah. Stefan, any views, comments, last words?
Yeah, so my score is probably 7 to 8 in both time periods. There's been some movement on some of the more macroeconomic issues that I think that we really needed to have, and then COVID has sort of set everything back a little bit. So I think there's been a couple of steps forward and a couple of steps backward, none of which are really controllable by the Indian venture capital ecosystem. So I still think it's probably the second or third, depending on how you view China, most dynamic venture capital market in the world, and is absolutely a place to spend time and to allocate capital to. So I'm pro Indian VC all the way.
Super. No, thanks for all being bullish, inspiring us, capitalizing us, Rahul and many other unicorns for showing the way, not just as from a valuation perspective, but as a marker of what scale is possible. You're absolutely right, Rahul. More and more people saying, I want to build the X of Moglex or Misho or of another part of the world. And that's a great sign of things to come. And this is, thankfully just year one of the decade. And so very excited. And that's why I think the theme of the title as well. I think the idea is by the end of this decade to get to that 9 on 10, 9.5 on 10 compared to where we were at the beginning of the decade. Can never be perfect, but we want to be an outstanding market for anybody who's interested in believing in the potential of both Indian entrepreneurs and the market opportunity. So thanks again. Good night to everyone. Thanks for joining in different parts of the world. And thank you, IBCA, for the opportunity.
Thank you.
Thank you, Carl.
Thank you, everyone. Bye-bye.
All right.